Economics correspondent Stephen Long is here now for our regular Friday night chat about the economic issues of the week. And Stephen, good to start the year with some good news, which is no rate rise this month, so it seems, but the Reserve Bank's put out a quarterly monetary policy statement. What's the longer-term outlook?
Well, I'd have to say that not much has changed, Dally. We're still looking at a situation where inflation at the moment is relatively benign, but the medium-term outlook, the longer-term outlook, is a little more risky in terms of inflation. So the Reserve Bank's big picture is that we are facing a terms of trade shock from rising commodity prices in an economy which is already short on spare capacity in key sectors with strong demand for labour, and that is likely to mean that rates go up over the long haul. They never spell out exactly what they're going to do, but in the lingo of economists, a tightening bias is very much in evidence.
And would you like to gaze into your crystal ball and say, well, if we've got the problems with the floods in particular, I mean, does it mean perhaps in April, May, June?
I wouldn't say that it's going to be in the next couple of months, but by mid-year it's quite possible. It really is a month-to-month proposition, and they are still assessing the impact of the events, particularly the latest cyclone, Yasi. They made the point that they haven't actually factored that in yet. But essentially, they're looking through these weather events, Ali. They're saying that it's going to really just change the profile of economic growth rather than the outlook for inflation. So what they're saying is that growth will be dampened in the near term and will rise more in 2011 as the reconstruction kicks in, but significantly they haven't changed their underlying inflation forecast. Now, if it means that we're going to see a big ramp up in reconstruction because of Yasi, that could change as well. So it's pretty uncertain at the moment, but what they're really doing is looking through this at that big picture impact of commodity prices on the economy. But I think it's surprised some economists who thought that they might have been signalling that there would be a big inflation shock from these events down the track as the reconstruction kicked in. They're certainly not saying that.
They're very sanguine now, but I guess, as you say, it could change.
It could easily. I mean, if their outlook is as they think that we're going to have this strong economy and you're building in a whole lot of public sector investment, then there is a risk of inflation down the track. On the other hand, there's risks offshore in Europe, as we know.
Indeed, and Europe, I mean, the big problem is still sovereign debt.
Certainly, and the Reserve Bank cites that as the major downside risk to the outlook. And the fact that it cites it, it's not saying it's going to happen, but I would have to say that it is a clear and present danger, and it is perhaps possible that those risks from the European sovereign debt crisis, an insidious feedback loop into the banking system, hitting the financial services sector globally and a dampening growth worldwide, is certainly a risk that can't be discounted, possibly a bigger risk than official forecasters like to say.
Well, let's just focus on the near term and no rate rise this month for the start.
Let's be happy.
Be happy. It's a Friday night. Stephen Long, many thanks for joining us.
You're welcome.